So you're thinking about buying your first home. That is so exciting. But let's be real, it can also feel like you're trying to navigate this giant, confusing maze of terms and hidden costs, right? Well, in this explainer, we're going to cut right through all that noise and give you a super clear financial roadmap. We're focusing only on what you really need to know to make a great decision. Okay, so you're seriously thinking about buying a home. That's awesome. But I get it. Beyond all that excitement, there's probably a little bit of anxiety, especially about the money. What does it really cost? We're about to pull back the curtain on all those numbers, the ones people don't always talk about, so you can feel totally confident and prepared. Let's dive in. All right, before we dive into all the numbers, the mortgages, the interest rates, all that stuff, we have to stop and ask the first big question, the most fundamental one of all. Is owning a home the right move for you right now? On one side, you've got renting, which is pretty straightforward, right? Your monthly payment is predictable, and hey, when the water heater explodes, that's your landlord's problem, not yours. It's got a lot less responsibility. But owning, well, that's a much bigger commitment for sure. It has more moving parts, but it also comes with two potentially huge advantages. You get to build your own wealth through equity, and you get that incredible long-term stability. Okay, let's get into a real nitty-gritty here. If you want to understand the true cost of a home, you have to look way beyond that big sticker price you see on a website. It's all about what you'll be paying every single month. Okay, if there is one acronym you burn into your brain during this whole process, it's this one. PITI. PITI. It stands for principal, interest, taxes, and insurance. And these four things are basically the building blocks of almost every single mortgage payment out there. So let's really tear that payment apart, piece by piece. You've got principal, that's the good stuff, the part that actually pays down your loan and builds your ownership. Then you have interest, which is just the cost of borrowing the money. But you've got to pay close attention to these other two, property taxes and homeowner's insurance. You usually pay a piece of these every month, and here's the kicker. They can change over time. They often do, which means your total monthly payment isn't always set in stone forever. I'm sure you've heard this a million times, right? The 20% down payment rule. But what actually happens if you don't have that kind of cash just sitting around? Is the dream over? No way. But it does bring another potential cost into the picture that you absolutely need to know about. So if you come to the table with less than 20% down, your lender is going to ask you to pay for something called private mortgage insurance, or PMI. Now, think of it this way. It's an insurance policy, but it protects the lender, not you, in case you can't make your payments. But here's the good news. It's not forever. Once you've paid down your loan a bit and built up enough equity, you can actually ask to have it taken off. Okay, let's talk about the actual cash you're going to need up front, because it comes in two big ways. First, you've got the before closing costs. This is stuff like paying for the home inspection to make sure the house is solid and the bank's appraisal. Then, bam, at closing, you've got a whole other wave of costs, which could be lender fees, title insurance, and paying some of your taxes in advance. You've got a budget for both. All right, so you've done it. You've found the house, you're applying for the loan. This is huge. But listen up, because this next part is absolutely critical. From this moment on, until you literally have the keys in your hand, your finances are under a microscope. So let's go over the rules of the road. Once that loan is in process, your number one job, your only job, is to just stay financially quiet. Don't do anything that could spook the lender. And that means no opening new credit cards, no financing a car. Do not go out and buy a house full of furniture on credit. Try not to change jobs if you can help it. Don't close out your old credit cards. Believe it or not, that can actually ding your score. Don't move big chunks of money around without talking to your loan officer. And please, don't co-sign a loan for anybody. Basically, just hit pause on your financial life until closing day. So you did it. You followed all the rules, you avoided the mistakes, and you got the keys. It feels like the finish line, right? But really, it's the starting line. Now we need to talk about the emotional side of this whole thing and what the long-term financial picture really looks like. It's so common for buyers to get to the very end, see all those final official numbers on paper, and just get a massive case with cold feet. You see that payment, all the fees, you feel the weight of it all, and it can be completely overwhelming. I want you to hear this. That feeling is 100% normal. So, after all that, the stress, the paperwork, the costs, you got to be asking, okay, so what's the payoff? What's the real long-term financial win here? Why go through all this? Well, let's look at a real-world example. Historically, homes go up in value over the long haul. This number right here, It's a pretty conservative guess for annual appreciation. Of course, markets are different everywhere and they go up and down. But the point is, this shows how your house can be quietly growing in value all on its own behind the scenes. And that's how you build equity. It's like this powerful two-pronged attack on building wealth. On one side, every single mortgage payment you make is like buying another little slice of your house. And on the other side, the market is hopefully doing its thing, pushing the total value of your home up. It's an amazing combination when it works together. All right, to bring this all home, no pun intended, here is your final checklist, the things you need to be able to say yes to. Number 1, are you truly comfortable with that full PITI payment? 2, do you have savings for more than just the down payment? Think closing costs, moving expenses. 3, is your job stable? 4, do you have a separate emergency fund for when, not if, the furnace breaks? 5, are you ready to be responsible for all the maintenance? And finally, number 6, do you plan to stay put for at least a few years? That's how you make all those upfront costs really worth it. Okay, we've laid it all out. The costs, the rules you gotta follow, and the potential rewards down the road, it's all on the table. So that just leaves one final, really important question. Now that you've seen it all and you understand what you're getting into, are you ready to take that next step?